Hey, thank you for taking the time to click on today's video. Lifetime income benefit riders. What are they, and are they good? Are they bad? Is it something that is going to be helpful to you, or is your agent, your broker, just being a salesman trying to get a commission out of you? Well, we're going to break it down. We're going to make it very, very simple to understand using a little bit of pictures, and hopefully this is something that will allow you the ability of making the decision for yourself if an income rider is going to be a good thing for you or not. Now, what is the basic premise of an income rider and why does it exist? Well, the first thing is that we understand that when we retire, we have things that we want to do, and we're going to need income in order to make that happen. I'm a big believer in making certain that my clients' lifestyle is being supported with as much income as is possible, and more importantly, guaranteed income if I can get it for them. Now, income riders are something that are basically very specific to one type of investment. That's called the annuity. And the annuity comes in a couple of different forms. It comes in what's called a variable form, which can lose you value, and it comes in the form of a fixed annuity, which cannot. Now, income riders are something that will really sound pretty good because the insurance agent or the stockbroker is telling you this is all guaranteed. You're going to get this 6% guarantee for 10 years and you can't ever lose money and you're going to get income forever. Well, that sounds almost too good to be true. Is it? Well, we're going to decide. Now, the first thing that we need to understand is that an income rider is going to be very similar to like a pension. You see, pensions only have two different stages. They have the accumulation stage where they're growing. This is when we're working and we're adding to the pension, or the employer is adding to the pension. And then they have the distribution stage. And the distribution stage is the fun stage. That's when we're getting income every single month and we can't outlive the income, and no matter how old we grow to be, we're still going to be getting the check in the mailbox. Now, the downside of a pension is the fact that, well, if you're getting paid, say, $500 a month and you need $750, you can't call up the pension company and say, hey, I need an extra $250. Well, the same problem existed for annuities. Annuities have been around for hundreds of years, and the fact is that annuities only had two stages. They had the accumulation stage and then they had the distribution stage. And when you started on the distribution stage of the annuity, it was the same exact thing. You basically had to annuitize and you were giving up accessibility to the principal in return for the check every single month. And if you needed more, well, too bad, so sad, you didn't get it. So now what insurance companies did is they created this income rider to solve that problem. Now here's how it functions. When we deposit money into an annuity that has an income rider, we're going to essentially now have two different balance sheets. We're going to have two sides. This side over here, we're going to call this our base. And that base is real money. That is our real tangible $100,000 that we deposited into this annuity. The second side over here is going to be our rider. And we're just going to put a dollar sign and then we're going to put lifetime income rider. Now, this is something that you're going to have to pay for over here. Now, remember that this side is typically free if it's a fixed annuity, and if it's a variable annuity, there is going to be some expenses. But the lifetime income rider is something that will most definitely come at a cost from the insurance company, unless, of course, you get one of these free riders, which do exist. What is the benefit of this income rider? Well, it's kind of twofold. The first is that we don't know, depending upon the type of annuity that you have, what that $100,000 is going to grow to. We don't know if it's going to grow from $100,000 to $101,000 or from $100,000 to $120,000 before you need your income. It's kind of a variable. Okay, it could depend upon the stock market. It could depend upon interest rates. It's kind of hard to predict what that base is going to turn into. Let's just say that it averaged 4% over 5 years. So now your $100,000 that you deposited in this base is now sitting right here, and it's now worth $120,000. Now, this income rider, the cool part about this income rider was the fact that your agent was telling you that it was absolutely guaranteed, and let's say it was guaranteed at 6%. Well, that sounded pretty attractive to you because interest rates really stink today. And so we've got 6%, this is a guarantee. So regardless of what this does, we know that this account over here is supposed to be guaranteed at 6%. Now, one of the first misunderstandings that I see with people and their income riders, the fact that they think that this 6% guaranteed is real. Number one, it is not real. This entire part of your annuity contract is hypothetical. That means that if you cashed out your annuity in 5 years, you're not going to be getting this balance, you're going to be getting that balance right there minus any surrender charges if they apply. So this income rider has had the $100,000, it's been accumulating at 6%, and let's say that now this income rider is sitting right here. It is now worth $130,000. Now, obviously this side has outperformed that side. So what's the benefit of this income rider? The benefit of the income rider is that it gives you predictability. You see, in the event that you needed now income, you wanted to start on the distribution stage of this annuity contract, the insurance company would base your income on the larger of the two. And obviously we know that $130,000 is more than $120,000. So now they're going to begin distributions out of the income rider side because it's going to create more income for you than this side would. And let's say for simplicity, it's going to produce for you $500 a month. Now, if we understand what the downside of a pension was, the downside of annuities way back in the day, it was that when you turned on the income, you lost accessibility to your principal. Well, that's where the income rider comes into play, because if you start taking income, and let's say you're taking out this $500 a month, and all of a sudden you have a financial emergency, you can actually call up the insurance company and say, hey, I understand that I'm receiving my $500 a month, but I really need an extra $5,000 out of my annuity contract. And guess what? They will distribute the $5,000 to you minus any surrender charges if they apply. Here's the downside to that. The downside is that whatever you take out of this side of your annuity contract, if you're already receiving this and you're on the distribution stage and you reduce or accelerate or take out more than the $500, it's going to reduce the future guaranteed income for you. So if you reached into that annuity and you pulled out an extra $5,000, it's completely within your right to do that, but it may reduce the amount of income that you're now receiving for the rest of your life, say from $500 down to, say, $450. So having accessibility to your principal is a positive, but obviously the reduction of the income in the future can be somewhat of a negative. Now, what's another benefit of the lifetime income benefit? Well, another benefit is this. It's guaranteed for your lifetime. That kind of goes without saying, but people misunderstand what happens. Is there a possibility that you could live so long that you have completely and totally received everything out of your annuity? And the answer to that is obviously yes. Yes, you can remove 100% of that money out of that annuity if you live long enough. You see, annuities do not create income. Annuities create cash flow. Essentially, what's happening is they are returning back to you every single year a part of your principal and a part of the interest that you've earned over the course of time. And when you get down to this level, now the annuity company is truly on the hook because there is no more money that is your money to return back to you. So once your annuity gets down to this point right here, from this point forward, these are what is referred to as life credits. Now, another thing to keep in mind about the lifetime income benefit rider, it is very much like the pension. It can not only create income for you for the rest of your life, but if you were espoused, if you're married, you can now turn on income and know that that income is not only guaranteed to you for your lifetime, it's also guaranteed for your spouse's lifetime. Now the question becomes, well, Matthew, what happens if I die? What happens if my spouse dies? What happens to whatever money is left in the account? Well, one of the things that we did not mention was the fact that your income is going to be based upon this higher value, but every time income is distributed to you every single month, it's going to be typically a dollar for dollar reduction on both sides. This means that let's say you deposited the $100,000, you've grown to 120 over here, you've grown to 130,000 here. Let's say that you have received out $10,000 worth of income from this annuity contract. This balance over here in your base is now going to be worth $110,000. And if you and your spouse both expired, if both of you passed, your children are going to be receiving the balance of what is left in this base account. They don't get this, they get that. So hopefully that gives you a little bit of context about income riders, if they are right for you. If you still have questions, don't hesitate. Reach out to us, send us a question, post a comment, go to our website, johnsonwim.com. Ask questions there, send me an email if you want to. I'm happy to answer as many questions as possible. If you like our little videos, I'd appreciate you giving us a big thumbs up. Share this with your friends. They need this information as well. If you like our videos, hit that subscribe button if you haven't already, and then we can ask you to smash that little red bell. That way we remind you every time we have a new educational video. So thanks so much for watching. I'm Matthew Johnson, and remember, it's up to you to make today a great day.